In today's video, we're talking about ETFs, particularly what are ETFs, how are they similar to stocks, how are they different, and when and why should an investor or stock trader think about using them. So let's get into the video. All right, let's go. So today's video was inspired by a question that came through on Instagram by Lino. Lino asked, what are ETFs and do I teach them and how do they differ from stocks? So Lino, thanks for your question on Instagram. So let's talk about ETFs. What are they? First of all, the acronym ETF stands for Exchange Traded Fund. That's what the acronym stands for. And what an exchange traded fund is, it's really a collection of stocks that are in a similar sector. So this is how it differs from buying an individual stock. So say, for example, you were going to buy Apple. That is one individual stock. Well, Apple is in the XLK, which is the technology sector. So the XLK is an ETF. It's an exchange traded fund. So inside the XLK would be Apple, Facebook, Amazon, just to name a few. So the XLK is an exchange traded fund, an ETF that houses several different stocks like Facebook, like Amazon, like Apple. And so that's where they differ. Instead of you going in and buying one individual stock like Apple, you could buy the ETF or the exchange traded fund, which would be the XLK, and invest that way. Now, some of the pros and cons of buying an exchange traded fund over buying an individual stock is that you could limit your exposure to one company. So if you bought Apple and Apple's having a lawsuit or they're having a bad recall on one individual iPhone or something like that, the stock could drop drastically. Whereas if you own the ETF and Apple has a bad day, where that ETF, again, is made up of Facebook, it's made up of Amazon, it's made up of Google, I think Verizon's in there, and many different other tech stocks. So just because one tech stock, Apple, may be having a bad day, the other 30, 40, or 50 stocks in there, if they're having a good day, it will make the price of the ETF, the exchange traded fund, go higher, even though one stock in there is going lower. Does that make sense? So you do get the benefit of diversification. So when people say you should diversify, well, there's a strategic way to diversify by going into ETFs, especially if you like a particular sector. So if you hear, tech stocks are on the rise, instead of trying to find out which specific tech stock may be on the rise, it may be beneficial to go ahead and purchase the ETF, the exchange traded fund. Now, one of the, maybe you could consider this a con of going with the ETF, is because you have a basket or a collection of stocks. Let's just say there's 50 stocks. This is just hypothetical example. Let's just say 25 stocks move up and 25 stocks move down by $1. So 25 stocks move up $1, 25 stocks move down $1. You could end up with a wash on that trading day because the 25 that moved up by $1 and the 25 that moved down, they basically canceled each other out and you broke even on that investment. So over time, it takes a little bit more for an ETF to move because you need the collection or basket full of stocks to actually move higher all at the same time, or on average, you need the ones moving higher to outpace the ones that are moving down. Versus if you were picking a specific stock that was just moving $5, $10, $20, you would get that 5, 10, 20 point move on that individual stock. Whereas the ETF typically wouldn't move 5, 10, or 20 bucks because you'll have some stock move up $5, but you also have some stocks move down $6. And so you would move up $1 in that exchange traded fund. So that's how ETFs work. Again, the acronym is Exchange Traded Fund. That's how they differ, and how they're similar to stocks is that you can actually buy them and trade them just like you would a stock. And you can, buy them and sell them on an individual basis. They also trade options on those as well. So now you know what an ETF is. For more training and information on how ETFs works and how you can profit from those by using options or trading them like they're individual stocks, feel free to swing over to thebrownreport.com. This is exactly what we teach inside our foundations course, exactly how ETFs works, how to research them, and then how to find the ones that are moving so that you can put the odds in your favor of being profitable. I'll see you on the next video.